Thanks so much for tuning in this interaction. It is now well known that the numbers of Titan were well ahead of what most people anticipated. So, and you could argue that this is large. This is probably in line with what the management had spoken to us about, or to the analyst community about, at the end of Q2. The point is, despite the near-term restrictions, is the commentary optimistic due to the upcoming wedding season? From what I hear or what I read, they're fairly positive about the re-engineered products, the lightweight jewelry, which can attract probably more consumers as well. Let's put all of those questions across and get the views of the man who matters. Mr. CK Venkataraman joins in right now. Thanks so much, Mr. Venkataraman, for joining in. You would have been pleased with this performance, though, as I remember, this kind of follows what you had guided to at the end of Q2.
Yeah, very, very happy with the results. Sort of played out to our expectations and hope, and certainly a little better than we thought we would achieve also, to be honest. But why should we sort of look a gift horse in the mouth? But overall, very, very satisfying.
The story for India Inc. in Q3, Mr. Venkataraman, has been the one of, even if there is revenue growth, there is massive pressure on the operational front, especially for commodity-linked sectors. But in general, very few companies are able to contain cost pressures. How was your experience in Q3? And what is your sense about how that will do? And then, of course, we'll come to the revenue and the sales growth and the outlook ahead. But just trying to get the cost element out of the way first.
Not a very, very big thing for us from an input cost point of view, certainly. Fortunately, the jewelry is nearly 80% or a little more of our business. And there, it's a flow-through situation where if the cost rises, the price rises. If the cost falls, the price falls, kind of thing. So we are sort of fortunate to be in a situation where 80% of our business is like that. So even if on the 20%, if there is something, we can sort of take it in a stride. But even there, it has not been such a big thing for us as it appears to be for other companies.
But you reckon that these margins could cool off a little bit from where they are right now, as Q4 or the 2022?
Possibly, yes, because it was a very, very outstanding quarter. And we also had some, one-time gains from various things which we spoke yesterday on the call. And those will not repeat. But, notwithstanding, even if I were to remove those, the combination of growth and, whatever margin improvement, even after discounting some of these things, we're very satisfied with that combination of growth and improving margin.
Okay. And I suspect, Mr. Venkataraman, that a better part of, or rather some part of Q4, some part of Q1 next year, both would have some benefits of the upcoming wedding season. You would be in a prime position to be able to push sales aggressively, I reckon. Any thoughts on how optimistic or how conservative are you for the next couple of quarters?
We're very, very optimistic, very confident about multiple things. See, one big thing is that because all of us have been, in a way, sitting at home, if I can call it, living in a kind of bubble over the last 2 years, the total additional savings of Indian households in the last 2 years is huge. It's in the hundreds of millions, billions of USD. And that money is available with the households for innovative companies to capitalize on. The second thing is over the last 2 years, and I'm talking about pre-COVID beginning in 2020, from January 20 to January 22, there has been a huge market capitalization increase in the country. And the wealth effect, again, of a very large number of people, and that number is now increasing as more and more people are getting into the stock markets. So the feeling of wealth on the one hand and the actual increase in wealth on the other are both enabling conditions. And they've been there now for many months. And the second thing is, as we keep hearing on every call before the call connects, we're at 150 crores of vaccinations. And particularly in the kind of segments that Titan operates in, both the income effect, wealth effect are very, very strong. The vaccination is virtually 100%. And the people's both anxieties and fears are down. Even if COVID is among us, even if wave 3 comes, it's okay. It's part of life kind of feeling more and more people are having. And of course, the money is there and the wealth feeling is there. And therefore, the companies which are really innovating and connecting with their consumers with the right kind of triggers can keep growing for a while. And therefore, certainly the CY22, because some of the things which are in a way peculiarly in our favor, particularly for the jewelry industry, is the absence of international travel, the constrained circumstances of weddings. So people are not spending 40 lakhs and 50 lakhs and even crores on catering, for example. People are not even spending on large honeymoons. People are not traveling abroad on family holidays. So all this money is available certainly to spend on jewelry. That may start reducing in calendar 23, but calendar 23 is a long, way off. So we're just focusing on calendar 22. So we're very confident, very bullish on all our businesses.
Yeah, well, considering we've surpassed decades in the last 2 years, calendar year 23 is certainly some time away, sir. You're right. Just wondering, you were doing some aggressive store expansions, as I gathered from the con call. Can you shed some light there?
Yeah, expansions are very much on, and the franchisee interest in all the brands of the company continues unabated. In fact, I would say is even increased, because I think everyone is realizing, particularly in categories where the sectors are still yet to formalize properly, eye care, ethnic wear, jewelry, prospective franchises of Titan Company are realizing the, the tailwinds which are sitting for all these categories, and therefore signing up. And even in watches, where our saturation is very high, but people are seeing the kind of agile innovation that Titan is doing, even in the analog watch business, and the transformation that we're doing to our stores, and the growth that's happening to those stores after the transformation, and a lot of belief in the analog segment as well. So across the board, franchisee interest is very high. The opportunities are very, very high and deep in the smallest of towns, and we are really pushing hard on the expansion side.
Yeah, especially in eyewear, I thought it was pretty aggressive. I just had one quick follow-up question in eyewear. So why such aggression? Is there a belief there, or do you believe there is evidence to show that this expansion will bear immediate results? And part two of my question out there would be the phygital format. Do you reckon that will be a big thing for the eyewear and the watches category? Leave out jewelry, but at least eyewear in particular.
See, over the last 2 years, the division has actually worked very hard on a sustainable, what we call a eco-light model of store, which is just the right size, and the capital expenditure required for the store, as well as the stocking of the products required for the store, is really optimally put together. Because more than any other category that Titan operates in, eye care is the most neighborhood of all the categories. The customers don't want to sort of travel too often, too much, to their eye care store. So if it is within a kilometer or two of their home, is the kind of preference. Because I think you also need maybe assistance, not often, but sometime, and therefore, unlike the other categories where you bought the product and there is nothing more after that. Whereas here, maybe the correction didn't work out that well, or the fit on your face needs some adjustment and stuff like that. And therefore, it may require 2-3 times visit to the store before it settles. And therefore, I prefer it close to my house, which means we need a large number of stores. But at the same time, from a viability point of view, it has to be optimal. So that insight has driven the design of that eco format store. And that is the strategy behind this aggressive expansion, both from a town point of view as well as localities in every city where we already present. From a digital thing, the complex aspect of this, this whole testing of the eyes, we don't have reliable technologies today to do it remotely.
Right.
So if I already have a prescription, then of course I can choose a frame online. I can upload the prescription and then get it fixed, and then Omni or whatever, or even online I can buy. But most people come to our stores and get the prescription taken through our optometrist. And therefore, till that technology is sorted out, it will substantially remain a physical business.
Okay. Final question before we wrap up, sir. It's difficult to give out 2022 estimates because it's too long a year, but suffice to say that the first half looks promising, and we get to the second half when we get there.
Yeah. I mean, we are certainly pushing for growth in a very big way. So we will grow. We will grow, and we will grow handsomely. All our businesses have, long runways. Some of them have exceptional headroom for growth from a market share point of view today. So, and we are a very, very, strong company. Apart from being now even more, there is a goodwill that, so many of us have perceived about the Tatas and all Tata brands over the last 2 years due to multiple reasons. And apart from a general veering towards more trusted brands that has happened in the last 2 years because of COVID, the Tata factor is, it is
immense.
Anybody would give an arm and a leg and everything else to be associated with that special brand. And therefore, with all this, we are gunning for very, very big growth in CY22, CY23, and next many years.
Yeah, and you seem to be doing full justice to that in this ship, Mr. Venkataraman. So keep up the great work. Good quarter. Congratulations on that, and all the best for the quarters ahead, sir.
Thank you, Neeraj. As always, good talking to you. Bye-bye.
Lovely talking to you. And viewers, thanks for tuning in.